What do you think when you hear the phrase, the rich don't work for money? Does that make you angry? Does that make you upset? Or does that cause you to get distressed? In fact, how can anyone make money without working? This phrase was popularized by Robert Kiyosaki, who is the author of Rich Dad Poor Dad, which is the #1 best-selling personal finance book on the market, and also the name for his first chapter of the book. What Robert Kiyosaki is trying to illustrate here is that many people focus on increasing their salary from their job and becoming better employees, whereas the rich focus on accumulating assets which bring money into their pocket. This can be difficult to hear and quite triggering to realize that your hard work doesn't amount to as much compared to someone else who's not working as hard as you but is getting far greater results. The key thing here is that this is a learning lesson, and what can we take away from this? I'll ask you a question. What happens when you increase your income? You may say, well, you pay more taxes as your income has increased. Another thing you can say is that, well, you may possibly spend more because you haven't controlled your finances properly, or you just want to reward yourself for the extra income coming in. The problem with this, which is discussed in the book, is this is the rat race. And I'm sure everyone has heard of the term rat race, but what exactly does it mean? I'll describe it in just a moment. Essentially, the rat race is determined by two emotions according to Robert Kiyosaki. Those two emotions are fear and greed. People fear that they're going to lose their job, but they're also greedy in the fact that they can earn a promotion, get a little bit of money. This is how 90% of humans operate, and they get stuck in this vicious cycle, sort of like a hamster wheel or rat race. The rich understand this concept and use this to their advantage. In fact, most of the fortunes that rich people have attained is during market downturns and crashes. To illustrate this example even further, I'll now showcase a couple of income statements and break it down from there. If we look at the first income statement, this income statement is for someone who's classified as financially poor. Essentially, the income comes from a job, which is paid in the form of a salary, and it goes directly to the expenses. Essentially, they're not saving any money. It's just money comes in and it goes out. They're living paycheck to paycheck. The second income statement here, you can see, is of the middle class. They earn the same way as the poor person, however, they're earning a bit more. And instead of going to expenses directly, the income comes, then it goes to the liabilities. And in here, the liabilities are listed as a mortgage, a car loan, credit card debt, and school loans. And you may be saying, well, hold your horses, Mihir. Isn't mortgage really a liability? And I'll explain that in just a moment. If we now move on to the richest income statement, here you can see there's a difference. You can see that the asset is the one that provides the income, not a job, not a salary. And there's a couple of reasons why this is really important, which I'll discuss now very shortly. But you can see that they also have liabilities as well. But the income is coming directly from the asset column. Now I'll talk about why the mortgage was listed as a liability. According to Mr. Robert Kiyosaki, he believes that if an asset is not putting money in his pocket, then that is a liability. So in that same stature or same example, a house can both be an asset and a liability according to this definition, depending on where the cash is flowing, which is a very important concept. Because here you can see that most of the income statement for these people, it's flowing towards negative. The only positive cash flow that is coming is from the job. Whereas the rich, they maybe not there at the ultimate stage, but they have money coming in through the job, they have some assets putting money into their pocket, things like that. But compared to the other classes, it's only one income stream and it's coming from the job, nothing else. So these are some key distinctions that I want you guys to look at and understand. An interesting way you can truly grasp this topic is think about money as an employee that works for you 24/7. You're restricted to working 40 hours, paid maybe get 50, 60, a little bit more, but you're restricted based on the time as you can't work 24/7. Think of money as an employee working for you 24/7, which is what the rich understand, and they allow their money to work for them, not the other way around, where the money works for them and they're not working for money. Which is a very key distinction to keep in mind. Another thing which I thought I'd just chime in and put in is also taxes. Most of the taxes, or we've heard on the news, is that, entrepreneurs like, Warren Buffett, people like this, Elon Musk, they pay very little to no tax. Why is that? It's because income tax is one of the most taxed forms of income. Personal income is the most taxed. Whereas if you get money from a business, then maybe you route it differently and you borrow and you get like a Division 7 loan, it's a whole different story. So also that you save money via the form of taxes. For instance, let's say you have a 9 to 5, Monday to Friday job. What do people do to earn extra cash? They simply start doing side jobs or a second job or side hustle, whatever you may call it. Whether they may drive Uber, deliver groceries, bartend, things like that. But the problem with those roles is that they are low barrier to entry, meaning you won't first of all earn a lot of money. Sure, you can get in, but you're also not improving your skill and your marketplace value, which would be far more beneficial just to increase your active income. Those 40 hours you work, just increase that amount rather than getting a second job. And I'll illustrate why with an example. Let's say we're following the same scenario given above. You work Monday to Friday, 9 to 5, and you make $1,000 per week after tax, and you're paid 38 hours, right? 2 hours unpaid. So if you did the maths, that equates to $26.32 per hour after tax. Now, let's say you decide to pick a second job, and your second job tends to be a low barrier to entry. Let's say bartending. You're making 20 an hour after tax. And let's say you work 20 hours, which equates to 400. So 1,000 from the first job and then 400 from the second job. And essentially if you add 38 hours with 20 hours, that equates to 58. So 1,400 divided by 58, that equates to essentially $24.13 an hour. Obviously that isn't necessarily a big jump, but I hope you can see if you're doing a sort of a bit more paying job, a slightly higher paying job, which isn't that unusual, especially if you're watching finance content, the drop would be even bigger. So that's what I want you guys to understand. A smarter and wiser approach could be just increasing your skills in your occupation, which I mentioned earlier. Even if you don't invest in real estate, stocks, crypto, whatever investment vehicle you have in mind, you'll have such a far greater ROI in just investing in your skills and increasing your active income. Because if you're going to blow 40 hours a week, that's not including traveling, anything else, why not just get paid more during that time? And there's many ways to upskill yourself. It's all about putting in effort. So hopefully that's given you a new way to think about this. But if you do want to do a side job, which is really good, you want to do a business or something like that, don't do these low entry level work. Maybe do something where there's leveraged income, which I'll talk about just a moment. The next point that I'm talking about now is the difference between active and passive income. Just a bit earlier, I mentioned leveraged income. So when I mean leveraged income, I'm talking about you have the income or the ability to scale your income. Not a lot of professions have it. The most common professions that generally people think of is sales or something like real estate transaction, maybe a real estate agent, maybe a mortgage broker getting commissions slowly, or commission-based sort of job. Because those ones, you don't have a ceiling. And let's face it, we all have 24 hours. No matter what hourly rate you're earning, even $1,000 an hour, you can only work 24 hours if you didn't sleep. That's it. So the point is to keep constantly increasing your income. And how do we do that? The only real way is for leveraged income. And there's few occupations like the ones I mentioned earlier. So that's what I want you guys to think about. And the whole dilemma with active and passive, we're gonna have to work actively. We have to. Passive income is really a myth in a sense. Or maybe we should change the definition of passive income. Is passive income less than 5 hours of work a week? 10 hours of work a week? What is it? But ignoring all that definitions, the rich focus on leveraging their income. For example, I've heard real estate agents, even if they can't take on more clients, they refer them to another real estate agent and they get a commission through that. So they establish not only a leveraged income pathway, but also different income streams. See how this all ties in together? That's what you want to have, a possibility to scale your income. If you're something in customer service, it's very hard to scale your income unless you're selling something because you're stuck on a 120K salary. Let's say you become operations manager or something, you get 130, 140. Let's say you become a general manager, or the manager above that, a call center manager, 150, 160. You see where I'm getting? You're going up, yes, which is good, but it's not that big of a punch, really, to push up. Whereas if you didn't have that ceiling ahead of you, whether you're in real estate, maybe you decided you're in IT, but maybe you decide to become like a contractor and you decided getting clients and things like that. You can push that. That is something you can push. And that's what the rich understand. So this could also be a thing for maybe you guys who maybe want to do a career change or possibly just looking into a career to get into, because a lot of people here are also young viewers. This is something you got to keep in mind. Maybe you can become an accountant, get multiple clients. And the only two ways that you're going to increase your income would either be you just charge your clients more or get more clients. But inadvertently, if you're going to get more clients, you can't do all of them. So there's two things you'll do. You'll increase your hourly rate, but at the same time, you can also hire staff. See what I'm saying? Same thing, video editing or just agencies in general. That's what I'm trying to grasp at here. So it's very important you guys to look at it this way in terms of leveraged income. Otherwise, you're just going to hit a ceiling. Overall, I hope this video touched on some interesting points that made you think twice about the things you have heard or maybe the things you're doing, especially the side hustle thing. Like, I consider a side hustle to be a side hustle if it has the capacity to scale. If the thing you're doing on the side I understand you may want to save for a house or you got something you're going to save for, but it's pointless. You're literally just chewing away your life, and time is the most valuable asset we all have as human beings. Aside from that, if any of these topics resonated with you or made you think a little bit outside the box and challenge your own beliefs, then please be sure to hit like and hit subscribe if you want to see more videos like this. Thank you for watching. I hope to see you in my next video. Bye.